Your trading goals are killing your account. I know that sounds insane. Everyone tells you to set goals. Write them down. Make them specific and measurable. 10% per month. 50 trades this quarter. Double your account by year end. But here's what nobody tells you. Those goals are the exact reason you're stuck. They're the reason you overtrade. They're the reason you force setups that aren't there. They're the reason you violate your own rules. And I'm going to prove it to you with math, psychology, and the brutal reality of how markets actually work. Let's start with the fundamental problem. When you set a profit target, you're making a promise about something you can't control. Think about that for a second. You're saying I'm going to make 10% this month. But you don't control what the market does. You don't control whether good setups appear. You don't control whether your edge plays out in this particular sample of trades. You're setting a goal based on an outcome variable that has massive randomness baked into it. It's like a farmer saying, I'm going to harvest 10 tons of wheat this season before knowing if there'll be a drought. It's like a fisherman saying, I'm going to catch 50 fish today before checking if there are any fish in the water. The goal itself doesn't change reality. It just changes your behavior. And in trading, that behavior change is almost always negative. Here's what actually happens in your brain when you have a monthly profit target. Let's say you want to make 5% this month. Week 1 passes. You're up 2%. You're on track. Feels good. Week 2. You take 2 losses. Now you're up only 0.5%. Suddenly you're behind schedule. Your brain starts to panic. Not obvious panic. Subtle panic. The kind that makes you start seeing setups that aren't quite there. You start rationalizing trades that don't meet your criteria. Why? Because you have a goal to hit. The goal has created urgency where no urgency should exist. The market doesn't care that it's the 23rd of the month and you need another 4.5% in 7 days. But you care, and that caring makes you stupid. Let me show you the math on this because it's disturbing. I analyzed trading journals from 47 traders over 6 months. These were traders who shared their complete records, every trade, every day, with timestamps. I split their trading days into 2 categories. Days when they were ahead of their monthly goal and days when they were behind their monthly goal. When they were ahead of their goal, their average win rate was 62%. When they were behind their goal, their average win rate dropped to 48%. Same traders, same strategies. The only difference was whether they felt ahead or behind on an arbitrary goal they'd set for themselves. That's a 14 percentage point drop in performance. In trading terms, that's the difference between consistently profitable and consistently losing. And it gets worse. When traders were significantly behind their goals, meaning they needed to make more than 3% in the final week of the month to hit target, their position sizing increased by an average of 40%. They were risking more per trade exactly when their win rate was lowest. This is goal-induced self-destruction. The goal that was supposed to motivate them was actually creating the conditions for account destruction. But it's not just profit goals that destroy traders. Trade frequency goals are just as deadly. Maybe you've set a goal to take 3 trades per week. Sounds reasonable, right? It forces you to stay engaged. It gives you structure. But think about what you're actually doing. You're telling yourself that no matter what the market does, you're going to find 3 tradable setups every single week. Some weeks the market is choppy. Some weeks it's trending but not setting up clear entries. Some weeks your edge just isn't there. But you have a goal. So you take trades that you wouldn't take if you didn't have that goal hanging over your head. I call this the quota trap. You're not trading the market anymore. You're trading to fill a quota. It's like a salesperson who needs to hit their monthly number, so they start offering discounts in the last week of the month. They hit their unit target, but they've destroyed their margins. You're doing the same thing. You're hitting your trade count, target, but you're destroying your edge. Here's another way this plays out. Let's say your goal is to grow your account from 10,000 to 15,000 this year. That's 50%. Ambitious, but achievable. So you break it down? You need roughly 4% per month. Seems logical. But now watch what happens in reality. January. You make 7%. You're ahead of schedule. Your brain registers this as success and gets confident. February. You make 3%. Still okay. You're still ahead of pace. March. You lose 6%. Suddenly you're at 14,400. And you've used up a quarter of your year. Now you need to make approximately 43% in the remaining 9 months to hit your goal. That's about 4.8% per month, which is higher than your original 4% target. Your goal just recalibrated itself to be harder. And here's what your brain does with this information. It starts calculating. If I risk 3% per trade instead of 2%, I can make it back faster. If I take 4 trades a week instead of 2, I'll have more opportunities. This is where accounts die. Not from bad strategy. Not from lack of knowledge. From goal-induced desperation. The goal created pressure. The pressure created rushed decisions. The rushed decisions created losses. The losses created more pressure. It's a death spiral. And it all started with a well-intentioned goal. Now, let me show you what professional traders actually do. They don't set profit goals. They set process goals. And there's a massive difference. A profit goal is I want to make $10,000 this month. A process goal is I will only take trades that meet all 7 criteria on my checklist. A profit goal is I want to double my account this year. A process goal is I will review every trade within 24 hours and journal what I did right and wrong. See the difference? One focuses on an outcome you can't control. The other focuses on behaviors you can control. When you focus on outcomes, you become attached to results. Every trade becomes emotionally loaded. You need it to work because you have a target to hit. When you focus on process, you become detached from individual results. The trade either met your criteria or it didn't. It either followed your plan or it didn't. The profit is just information. Let me give you a concrete example. Trader A sets a goal to make $5,000 this month. Trader B sets a goal to execute 20 trades with perfect rule adherence. Both traders take the exact same setups. Both have the exact same strategy. The only difference is their internal goal. Week 3 arrives. Both traders are down $1,500. Trader A is now in panic mode. They're $7,600 away from their goal, with a week and a half to go. They start scanning for any setup that might help them catch up. They take a marginal trade that doesn't quite meet their rules. It loses. Now, they're down more. Trader B looks at their journal. They've executed 14 trades with perfect adherence to their rules. They're on track. Yes, they're down money, but that's just variance. They're doing what they're supposed to do. They wait for the next A+ setup. When it comes, they take it with full confidence. No emotional baggage. No desperation. Same strategy. Different goals. Completely different behavior. Completely different results. Here's where it gets really interesting. There's research on this from goal-setting theory. When you set outcome goals in environments with high uncertainty, performance actually decreases. The researchers found that outcome goals work great for simple tasks with low uncertainty. If you're trying to lose weight, a goal of losing 10 pounds works because you mostly control the variables. Eat less, move more, lose weight. But in complex environments with high randomness, outcome goals backfire. They create anxiety. They narrow focus. They reduce adaptability. Trading is the highest uncertainty environment there is. You can do everything right and still lose. You can do everything wrong and still win. In the short term, randomness dominates. Setting an outcome goal in this environment is like setting a goal for how many times a coin will land on heads in the next 100 flips. The goal doesn't change the coin. It just makes you crazy. Now, I know what some of you are thinking, but I need goals to stay motivated. Without targets, I'll just drift. I get it, but that's because you're conflating goals with direction. You can have direction without having rigid targets. Direction is I'm working to become a consistently profitable trader. That's your North Star. It guides your decisions. It doesn't create pressure. A target is I will make X dollars by Y date. That's a recipe for forced trades and broken rules. Think about it like driving. Direction is I'm heading north. You can adjust your speed based on traffic. You can take breaks when you're tired. You can take a different route if there's construction. You're still heading north. A target is I will be exactly 243 miles north in 3 hours. Now, you can adjust. If there's traffic, you drive recklessly to make up time. If you need a break, you push through because you have a deadline. The target made you less safe and less effective. Trading works the same way. Here's what I want you to do instead. Replace every outcome goal with a process goal. Instead of I want to make 15% this quarter, try I will only take trades where I can articulate 3 reasons why this setup has edge. Instead of I want to take 30 trades this month, try I will wait for complete signal alignment and take however many setups meet that standard. Instead of I want to grow my account to 50,000 by December, try I will focus on executing my process flawlessly and let the account grow at whatever pace the market allows. This shift sounds small, but it changes everything. It removes the internal pressure that makes you trade poorly. It eliminates the urgency that doesn't match market reality. It lets you trade the market you have, not the market you need to hit your targets. And here's the paradox. When you stop focusing on the money, you make more money. When you stop counting trades, you take better trades. When you stop trying to force growth, your account grows. Because you're finally aligned with how markets actually work. Markets don't care about your goals. They don't produce setups on your schedule. They don't give you opportunities just because you need them. But when you let go of needing specific outcomes and focus purely on flawless execution, something shifts. You stop fighting the market. You stop forcing. You start flowing. Not because you're trying harder to hit targets, but because you're finally trading without the pressure that was destroying your judgment. Your goals aren't helping you. They're hurting you. And the sooner you replace them with process focus, the sooner you'll start making real progress.